Well, thanks, viewers, for tuning into this broadcast. There are businesses which have been able to weather the storm better. The data that has come out even post the March quarter numbers has looked reasonably interesting. And while Vibha Padalkar of HDFC Life, when she spoke to us a few weeks ago, in a very candid fashion, did say that business had come to a grinding halt. By their own admission, I think they would agree that the quarterly numbers and the April numbers that have come out look a lot better than what probably even they anticipated. But let me ask her, let me not put words in her mouth. She joins in right now for that perspective. Vibha, thanks so much for taking the time out. Um, when I spoke to you then, and I don't know if I misunderstood, but maybe you were just being candid that business was looking tough in that environment. But have you been pleasantly surprised by the kind of numbers that you yourself have put out for the quarter gone by in March or for the month of April?
Yes, I think we were somewhat relieved. We were bracing for maybe a 50% fall in business. That's how the industry overall has in fact performed. So about 44% fall in YOY. But we have fared better. So our degrowth has been 29% on an individual WRP basis. And the consequent surge in market share, both in terms of number of people that we have sold policies to, as well as the rupee amount. So yes, I think our digital strategy, which we've been working on for the last 2 years, now in full-blown rollout has started working. And so yes, it is a great relief as well as a source of strength.
Yeah. Okay. Just one quick numbers update on a couple of things because we didn't get a chance to talk to you post your March numbers and post the April trends as well. The trends for the industry showed a 44% degrowth, but I think you did reasonably okay. Can you give us some brief update on how April shaped up and whether the first 15 days of May or the first half of May has kind of echoed what April was doing, or has it been better or worse?
Yeah, so we degrew 29% versus an overall industry degrowth of 44% and a private industry degrowth of 40%. So those are the numbers, and hence a consequent surge in almost 300 basis points surge in our market share on an individual WRP basis. Similarly, on a number of policies sold, we also did relatively better. So we degrew by 21% versus an overall industry degrowth of 68% and private industry degrowth of 34%. And again, a consequent increase in market share by almost 260 basis points. So those are the numbers. In terms of your question on what are the 15 days of May looking like, fortunately, we're continuing to forge ahead, especially in channels like online. In April, for example, our online channels grew about 30%. So there was a growth in that channel. Some of our smaller corporate agency alliances also grew upwards of 70%. Our agency channel was flat, which is a good place to end with, you'll agree, in these circumstances. And consequently, again, the share of our online channel grew from about 15% in April of 2019 to 23% in April of this year. Our agency channel as a percentage grew from 13% April 19 versus 19% contribution April of this year. So our own proprietary channels have done fairly well, especially through the digital mode. What we are finding in the first 15 days is that our bancassurance channels are beginning to fire. And the rollout of all our digital initiatives for new business end-to-end processing, backed up by telemedicals, which was proving to be a stumbling block, as well as pre-approved sum assured, PASA as we have labeled it, that too has started picking up pretty well.
Okay. So I'm wondering, is the larger trend? I'm wondering, our analysis and when we put out that copy for the insurance trends as well, seem to suggest that one, the higher share of protection and the annuity businesses helped you cushion the impact of this. Now, how do these metrics work? Do you think in a post-COVID world, because you have that advantage, that might anyways hold you in better stead going ahead as well? Because not everybody has it.
Yes, I think the balanced product mix, which is something that has been core to our strategy last 7 years, is really helping us tide over a lot of vagaries, whether in the macro environment or customer preferences or volatility in stock markets and so on. So that strength continues on the back of product innovation as well as technology innovation. I think it is three-pronged, and what we sell and how we sell, all of that coming together on a digital platform is certainly here to stay, even post-COVID.
Okay. Vibha, the other question is, I think there were a lot. I'm just trying to get a sense from you that there were a lot of innovations in products that you were doing pre-COVID, which would have helped you build a legacy of followers, which might have bought in higher size, higher ticket products with time. I mean, that partnership with Airtel, for example, et cetera, et cetera, et cetera. They were all probably digital platforms. Are those faring a bit better than what other things would have fared in a COVID world? And are you still hopeful that and some other newer trends might continue to keep you in good stead going ahead?
So in terms of number of policies, yes, it is continuing to fare well. So people are continuing to buy and feel enthused about small outlays to start covering themselves when earlier they probably did not have any cover. Are the ticket sizes going up? No, they are not. And we don't expect them to as well in a COVID scenario. People are looking at cash conservation. Why only the likes of Airtel, but also in our regular bank assurance and agency and other channels, we are seeing smaller ticket sizes. So if an outlay might have been 1 lakh, today it might be closer to 50,000. And I expect that to go away once business starts limping back to normalcy.
Okay. I'm guessing that the hit that you took in the March quarter for the solvency ratio getting adversely impacted by the falling equity markets will now not have as big a hit, or would it? April was actually a pretty decent month, and now the markets are probably a bit more stable than the initial fall.
Yeah. So the reversal has happened on that.
Okay,
to a fair extent, yes.
Okay. My final question, Ms. Padalkar, and that is on whether your thoughts about business momentum and continuity, have they changed compared to what they were? Because it's such a fluid situation that things are changing probably every 15 days. You had spoken about how business had come to a grinding halt then. And therefore, that might have been a belief that the business would be very adversely impacted. Is your thought process a bit different now?
Yes, certainly. So, Neeraj, early on during the lockdown 1.0, people were not even giving us meetings. And quite rightly, all of us were figuring out where to get our groceries from and where to get our medicines from. Now it is very noticeable that certainly people are getting used to having Zoom calls or having WhatsApp calls and digital means of communicating. So we are certainly getting the meetings. We are getting the share of their mind in terms of need to buy insurance. And like we saw during Demon, people have started accepting that this is going to stay with us and we'll need to learn to live with this. And insurance is an important aspect that they need to pay attention to. Perhaps they have a little bit more time on weekends because they really can't go anywhere. And coupled with, things like we have a 3-click PASA journey, so pre-approved sum assured, simple point of sale POS products. It's a very lean journey. Gamification, for example, you purchase through a selfie. We have rolled out our frontline sales model I talked about in my analyst call, where in end-to-end you can sell as if you're sitting in front of the prospect. So that has also helped gain confidence from our prospective customers.
Well, we can only wish the best to you, because your business moving up, which means people are getting more and more insured, which is probably the need of the hour in a country like India. But all the best for business, and thanks so much for speaking to us today at BloombergQuint.
Thank you. Appreciate it.
Okay, that's HDFC Life, and clearly a bit more optimistic about how business is shaping up right now compared to what was the case in lockdown 1.0. Viewers, thanks for tuning into this broadcast.